Good afternoon, everyone. Brent oil is now, crude oil is now above $110 per barrel. Yeah, that is the biggest headline today. The prices are really, really high, oil prices. And that is something that directly affects us, Ugandans. Were directly affected by the oil prices. So looking at, what's going to happen in the future, things might really take a turn for the worse, if this is not figured out very fast. But that's the headline for today. Brent crude oil, $110. Right now it's 113.2. So 110, was a big headline, but right now it's 113.2. It's moving upwards there. And just a few moments ago, it was actually 115.23. So things are really bad, especially affecting oil. And so we should really prepare ourselves for whatever is going to happen in the future. If this war against Russia, the war itself might, it's a bad thing, but the sanctions are really going to affect people for an even longer period of time. So let's just keep watching the news and see how these things get resolved. If these prices go down, then that will be very good. If they don't, if the war ends and these prices don't go down, then we shall learn how to live with it. Okay, so today on the economic calendar, there are a number of events that are affecting the charts today. Okay, so first of all, let's take a look at these index charts that I put some trades in some time back to see how these index charts perform, how much money you can make from a certain price movement. We're looking at the Dow Jones. I think most of them have already closed. There was the Dow Jones, that is the US 30. There was the UK 100. Then there was the German chart. I think let me pull this up a little bit. So some of these charts have already taken profit. This is a demo account. This top one here is GBP, JPY. It was a very bad sell, very bad buy. So that one went to negative 115. Not so bad. Then all these ones here were at a lot size of 0.1. So we're looking for just $100 from each chart, and these ones took profit. But it's just the reality of making this much money from a small price movement on the chart. There is this. These trades are still running. There is this GBP versus a Norwegian krone. That's another chart which is quite it's quite profitable. Let me load it into one of these charts and we see how it is performing right now. So you can just do that. You can drag a chart from the lineup of the trades that are in and you see how it's performing. So the GBP versus the Norwegian krone, that's how it is. Not a very small price movement. This is a 4-hour chart and the pips are so many. They're about 2,799 pips in that small price movement. And so this $800 comes from about 1,475 pips. That's the equivalent. So here we have the S&P 500 index. This one was one of the charts that we loaded. Looking at that, looking at these index charts. So it is selling and the take profit we wanted to take was 100 pips to make $100. So the S&P 500 index, this is a 1-hour chart. Let me zoom it in a little bit. So that's how far it has to go to hit that profit. It hasn't yet gone that far. So all these other charts. So in your history, you can also trace where you opened a trade and where you closed it. Let me start with this Dow Jones. So it just shows you that. That is the point of entry and the point of exit. So if I put it into this other kind of chart, which is it's a bar chart, not a candlestick chart, but then a bar chart. Yeah, so it really pronounces these entries and exits. So that small price movement, if I put it in a 30-minute chart, you can see it more clearly. This small price movement is the one that made that $100. But let's not forget that this $100 came from a price movement of about 100 pips. But before it got there, it moved upwards to about 362 pips in the negative. So that was about negative $360 up there before it took the profit. If it continued moving upwards, that was negative $500 up there. So you can see how how these charts, they're very profitable, but they can take a lot of money. Then dropping from the top to this bottom would have made about another $500 at this bottom. So yeah, so the prices can keep on fluctuating when it's against you. You just wait for it until it comes out and makes some good profit. So here you could lose $500 if you panic, but if you wait, you could make $500 down there. So that's for the US 30. So every pip can potentially give you $1 on a 0.1 lot size. So that would have been, if you are trading the lowest lot size here, you could have earned $10. Yeah, you could have earned $10, and up there it could have been a negative $50, or here positive 50. So if you have $100 and you're trading the Dow Jones, then you can make some good profit. You can look at how this bad price movement could have been something that you could have made some profit from. Okay, so yeah, so all these charts are okay. This one here moved so well. This one here, I think it's a Spanish 35. It's another index. Yeah, so this one here also took 100 pips and made $100 on the 0.1 lot size, and the price movement here is a lot better than the one for the Dow Jones. Yeah, the negative side that it moved could have been about $130, about $130 maximum. Yeah, so prices could have moved against you for just that amount, and you come out with a lot more money. If you right now it is about a positive $300, the maximum as of now. If prices continue, then the price here continues. So with a 0.1 lot size, here you're looking at about a negative $120 on a 0.1 lot size. So if you have $1,000, this can really work out for you. If you have $100, a 0.01 lot size, here it would be negative $12, and down here negative $30. So these are the strong charts. The UK 100, you can look at its price movement as well. Not so big, just 100 pips. On this 1 hour chart, this is the third strong chart, and yeah, these are now my, these charts are now my target for the robots. I don't want to put a robot in a chart that, you have to wait for it to move so far. Yet, you're just programming something. So this chart, UK 100, is actually very, very strong. It hit the $100 with, with only 80 pips. So this one is more profitable than all these other charts. So 80 pips, 0.1 lot size, $100 in profit. So this one is, this is the strongest chart so far, UK 100. Okay, let's look at this is the German 40. Yeah, German 40 index. This one looks, this one looks too exciting. Look at that, just 2 candlesticks. And it took the profit. Let's see how many pips are in there. This is a 1 hour chart. Yeah, so, this one moved, it moved 100 pips in that price movement. So this one, it has a very high concentration of pips. So this one is probably the most, this one has overtaken the other one. So this is our, these Germans. So this German chart, German 40, this is this is our point to put robots, this one here. If you have a robot giving you 5 trades like this every day, you end up with about $500, without lifting a finger. Very small price movements. Yeah, but the opposite is also true, so we have to be very careful with how, how we are going to work on this. So this one here is okay. This is 100 pips. That's 100 and okay. That is 282 pips. Yeah, so here you make $100. Here you lose almost $300. Yeah, so yeah, it's still workable. The profitability part, it is a glass half full, not half empty. Okay, so this one here is the French index. Yeah, let's see how wonderful it is. Yeah, this one took a few hours to make its profit. Took about 8 hours and 100 pips. Yeah, not a very big price movement, but very good profitability. Yeah, so these are the strong charts. 1, 2, 3, 4, 5. There are 5 charts. This green here shows that it took a profit. This GBP, JPY, it's not green because I closed it manually. But anyway, these index charts, they give you very good profits, and they are, they're all based on stock charts, stock companies of America and Europe, and yeah, by the time you get some money out of them, you'll have really got some, you need to see the technical analysis so well, so that which are the high points, the low points, which points have volatility. Yeah, so you can take advantage of that. And you just have to keep in mind also the fact that these charts, they do not close when the stock charts close. Now that is something very, very important. A chart like let's say the US 500, this is this one is still open. Yeah, the S&P 500 index. Yeah, so this chart, it has so many companies within, about 500 companies. And as it keeps on running, it doesn't close like when the stock market closes in America. It keeps on running. So from this chart, you can have an idea of what's going to happen in these other stock companies. So we have this chart, we have these prices going up, and let me look up some of these stock companies. The US session hasn't yet opened, so the stock exchange that's in America is still closed. So you can look at this is Apple. You can look at this place, how stagnant it is. Prices are not changing. These Forex charts, prices are changing vigorously. These are, these main pairs, the prices are changing vigorously because, for them they are open. They open on Monday and close on Friday. But the stock companies, they are static. So, yeah, so looking at where we can make a comparison. Okay, this is Bitcoin Cash. Can close that one out. And we just make a very simple comparison between what's happening with Apple prices, the share price, and the US 500. So this one closed, yesterday. Yeah, yesterday at around 10 p.m. Yeah, on this MetaTrader time, 10 p.m. And right now, if you look at the US 30, let me open the same. Okay, let me look for 10 p.m. as well. Yesterday, 22. Okay, 21, 22. Yeah, so you can see where the price is. So the US 500 is moving. Let me just mark that. So we have the US 500 there. That's how the stock charts are moving. It's some kind of a range market. Let me see how it is with the Dow Jones, the US 30. Okay, so that's where it is. Still some kind of a range market. So this is how the prices are moving for all those stock companies. And the US 100, same thing. So that is what is happening with these stock prices. They could be moving like that, during this time when we can't actually access those charts. So if the price closed around there yesterday, if you look at Apple, yeah, if the price is closed around there, then yeah, we have it coming from this bottom. This bottom here looks like it moved a lot, but you need to understand that for this stock chart, it looks very recent, but there are too many gaps. There are too many hours missing between this very big drop and where the price is now, because this stock market keeps on closing every day. So there are so many hours that are accounted for inside this, this US 100 and Nasdaq, but you don't really have all those candlesticks in Apple. So if you're buying these stocks and if you're trading them using the CFD system, then you need to be aware of that. So the trading hours for this, they'll be opening soon, this afternoon, and this can really help you to keep track of everything that is happening right now with these stock markets. Okay, so for the economic calendar, we have some events. We have this. These are too many abbreviations there. What I can make out is year over year. So we have the Eurostat captures. This is the Eurozone HICP. Okay, so this one is a high impact event. Very high impact event, and so we have the 5.1% and 5.4% as the consensus. So the previous figure is 5.1, and it's expected to be even better. So this is good for Europe. And so this one here, the HICP, it measures the changes in purchasing trends and inflation in the Eurozone. So if it if it is high, then it is good for the euro. If it is low, it is bad. But then we have a very positive consensus, and that is year over year. Then we have this other one here. It is the HICPX. Too many abbreviations there. So this one is the measure of price movements by the comparison between the retail prices of a representative shopping basket of goods and services, excluding the volatile components like food, energy, alcohol, and tobacco. So this one here also, a high reading is a positive for the euro, while a low reading is negative for the euro. And looking at the consensus, we have a positive expectation, and this is just in about 23 minutes from now. 23 minutes will be exactly when this program will be closing, and I would have loved to trade this with you, and we can take on this event, but very soon there will be so many events during the program which we can take advantage of. Okay, later on at 4:15, always make sure you have your clock right. It's GMT +3. Just keep on checking that, just in case it changes. You may be in a different time zone and you wait for these events to play out and you won't be aware. You may not even be looking when when you miss something. So we have the ADP, employment change, and I keep on saying that in America, employment is number one. So many people, their resources are in gold and silver and oil and whatever. But in America, these people treasure human resource. Employment is it boosts the economy. That is something that so many countries don't look at such things. But anyway, so this one here, we have the previous figure as negative 301, and the expected figure is 388. So this one here is very, very positive, coming from negative 300 to positive, more than 300. That's a very good figure that you can bet on that you'll have some good, market impact from that. The only problem with this consensus, sometimes it comes out directly opposite, and it's it really bugs. So that is at about 4:15 of our time. And then at 5:30, this one is not a high impact event, but these speeches from the Federal Reserve Bank, they are normally, the impact can really be more than what is expected. So this is a speech from James Bullard, or James Ballard. He's the president of the Federal Reserve Bank of St. Louis or St. Louis, depends on where you come from. Yes, he's going to give a speech at 5:30 of our time. You can watch that speech, or you can just watch your charts and see how you're going to get that market impact. At 6 p.m., the Federal Reserve, still, so 30 minutes from the speech from Ballard, and there will be another, this one here, he testifies. His name is Jerome Powell. So he testifies before Congress. I think you have been watching those Congress hearings at on Capitol Hill. Normally you can watch that. You can watch that on this CNN. Those broadcasting companies. Those big channels. Those international channels. You can watch this. It's going to be at 6 p.m. of our time. So that one, many people can catch it. So it's just a speech, it's just, people talking, but the impact from these two events, it takes some time. These ones here, which are statistics, the moment you see those numbers, if they are red, it's bad. If they are green, they are good. You have immediate market impact. But these speeches, you give it some time. Then at the same time, there is interest rate decision. This one is from the Bank of Canada. Very, very big event, especially, coming from Canada. Canada, now that there are sanctions on Russia, and Russia is a very big oil exporting country. Now, Canada has now, it's now performing well. It's now becoming, it's now getting more demand. These are countries that really depend on oil so much. So the interest rate decision will come from the Bank of Canada. It might have nothing to do with oil, or it could have a lot to do with it, in so many indirect ways. But this interest rate decision, it was previously 0.25%. It's now going up to 0.5%. That's a very big increment for an interest rate from a bank, from a national bank. So so this one here, it's it's quite this one is quite huge, especially for all the charts that have the Canadian dollar within the pair. So this one here is something very important to look out for. Then at the same time at 6 p.m. there'll be another report coming from the Bank of Canada, the interest rate statement. That one you can download it. You can always click on the website. You click on the website, something like this will open. You just keep on following the links until when you get that statement. You can read it yourself. Normally not very long, about 1 page, 2 pages. You can read it yourself, and then you can see the market impact. You can actually have, an idea of what's going to happen before the prices really start moving upwards. So let's look at these charts, which are. We have the Euro USD, strong selling movement, GBP USD, very strong selling movement. Let's take a look at the charts and see how they are performing. Euro USD and GBP USD, very strong selling movement. So you can analyze those charts and see what you can do about them. It's quite important to when all these time frames are selling. When all those time frames are selling, it's something very, very important for you, to just keep an eye on those charts and look at the 1 minute chart and how far it is selling. You look at the 5-minute chart, the 15-minute chart, the 30-minute chart. And with this app, it really it takes a lot of time away from all the kind of analysis I'm going to be doing. There are 28 indicators, all in one app, in one time frame. Every time frame has its own 28, and it's like a vote. If many are voting that it's a sell, it's not as simple as that. But if prices are below the average, then that is a sell. That is the moving average telling you to sell. If the parabolic size is above the price, that is a sell. Those are two indicators telling you to sell. Yeah, if the stochastic oscillator is in a selling movement, then it's a sell. If the relative vigor index is in that movement, so if you have many indicators pointing within that direction, then technically price is moving there. It doesn't need any kind of you don't need to really look very far, yeah, to find something very supernatural to give you an outlook of what's happening at the moment. These indicators, they will do it for you. Yeah? If it's pointing that direction, then by all means, that's the direction you're headed. Some people say that indicators give you data after price has moved, yeah, which is true. But that is in a short term if you're a scalper. But if you're a long-term trader, it takes a long time for these indicators to shift from a buying movement into a selling movement. So you can have that as a point of confidence when you're trading, when you're doing your analysis. Yeah, at the very least, you'll know that the big charts are selling. Yeah, so if the big charts are selling and the small charts are buying, then they are about to hit some kind of resistance and hit some point of reversal, where you can start selling. Because if the 1 hour chart and the 4 hour chart, if they are going down, you can't have the 5-minute chart shooting through the roof. Yeah, at some point, it's going to get stopped in its tracks and it's going to start moving down as well, because that is where the price is moving. And the time frames are not different charts. Yeah, they just represent the same price movement being viewed from a perspective of time. Yeah, you're looking at one candlestick of 4 hours. I think people get that so wrong. They think that the 5-minute chart is so much different from the 30-minute chart. Yeah, but the price is the same. The price movement is the same. It is just more detailed in a smaller time frame. I really don't know how to explain that to make it a bit simpler, because I've been getting so many phone calls, someone telling me that I had strong buy in the 5-minute chart and I bought, and yeah, things didn't go so well. And when you ask him what were the other charts saying, what was in all those other charts, were they selling? If they were, then you shouldn't have bought. You should have waited for that buy in the 5-minute chart to synchronize with all the other selling charts, the bigger charts. Then you could have a better price movement downwards. Then normally the response is, I'm only trading the 5-minute chart. I'm not trading the 1 hour chart or the whatever. So I want to make all my profits in the 5-minute charts. But they're all related. It's relative through all the time frames. It's the same thing happening in all time frames. You just have a more detailed representation of the price movement in a smaller chart. Yeah, so I think that is as simple as it gets. Yeah. Then the index charts, when I started talking about them, everything just went. Yeah, people were saying, how many stock companies are in this chart? How many in the other chart? How do we know that it's not being manipulated? How do we know all that stuff? Yeah, so market manipulation must be, the least of your worries. Yeah, market manipulation. Sometimes it happens all the time. Sometimes it doesn't. Yeah. If you follow up so many events, especially something to do with oil, you can see the price is going up, and many people keep on wondering, how come in Uganda the US dollar price is going down, yet we are paying more for fuel and all this, and how are we going to solve these issues? And you may not have direct answers affecting that, because there are so many authorities that are in that entire system, that whole chain has so many authorities, and they're the ones who determine what price you're going to have. So it's not very direct that the price of the dollar is going down, and sometime back the prices of crude oil were also going down, and our prices here were going up. So you have the dollar going down, you have crude oil going down, but the prices of our fuel were still skyrocketing. But anyway, that is most of that had something to do with us here. How we manage our own, our own commodities and finances and all that. So, there's a lot of gray area inside there. And yeah, so index charts, they always give you a value of the total of all the charts that they have within their composition. So if someone has about 500 charts, then by all means, if there are 500 companies in their index, then what you're getting is a value of the total of everything calculated somehow. So all these companies that provide these index charts, they have a way that they streamline their data and give you a value at the end of it. Yeah, so that is something you really need to mind. I talked about the the indices, the synthetic indices, where it's not directly, okay, it's not the values of the charts themselves, but then it is another bet on the value of that and all that. So normally the index charts are a bit, they're a bit tricky. They're very, very tricky. But understanding how the synthetics work will really help you, especially with fundamental analysis. You will know what to stay away from. Okay, so Euro USD, very nice selling formation. You can see that the US dollar is really overpowering every other, it's really overpowering so many of these companies and all these other economies. So, there was that time jump, there is that gap inside there. Let me remove the period separator so that it appears a bit clearly. So we had that jump, that one that happened. This was what happened when the war began with Ukraine. And, there are so many speeches from the European Central Bank presidents and the board of directors and all the people involved. And prices seemed to, to be moving up. Then over the weekend, there was that big drop. Yeah, and prices started moving up again from the beginning of this week. And right now, we have prices below how far they had moved with this Ukrainian war. So, yeah, however, there's a very big problem there. And yeah, it's not an all-time low. There is this low and there's that low. So if prices are going to continue moving downwards in the Euro USD, these are areas to look out for. Yeah, these are two areas of support where a price could reach. Yeah, the first one is 1.06419. The other one is 1.03493. Yeah, so to the first one, they are about 417 pips. To the second one, they're about 711 pips. Yeah, so I think we did some analysis on our Euro USD charts, and here we're looking for the Elliott waves. This is a system that so many people, it really bothers it. It's not a very simple system. I'll also admit it's quite difficult. I think by the time we looked at it, the prices were somewhere, they were somewhere here. Yeah, well, when I drew this very long line to just move, it has to be longer than this one. So for the Elliott waves, we have price moving in waves. We have the wave number 1, which is that one. Wave number 2 must really be short. Wave number 3 must be so much longer than this wave. Yeah. Then we're going to have wave number 4. Yeah. So wave number 3, let me put it into a day chart. Okay, let me keep it in the 4-hour chart and just zoom out a little bit. So wave number 3, it has really moved somewhere below there, which is good. So wave number 4, because this wave number 2 is very, very steep. By the law governing the Elliott waves, wave number 4 is supposed to be somehow like that. It's supposed to be slopey. It's supposed to be a bit, be a bit weaker. So wave number 4 will move in some kind of a range, and some kind of a range market, because this one here was very stiff. If this one here was slopey, then we'd have a stiff wave number 4. But yeah, this one here, wave number 3, it looks quite yeah, it is long enough. It is long enough to really give you the proper Elliott waves theory and how the price moves. So it's long enough, longer than this wave number 1. So wave number 4, we shall expect something sloppy. So yeah, so we just wait. Maybe it's going to start from here, since price has hit a very low point and it has gone below it. So we might have wave number 4 starting somewhere down here. If it has made proper support, if we get a good, a good movement of this RSI, we already have good movement here for a reversal. So we have this these higher lows moving up, and then we have these lower lows moving down. So we could easily start having our wave number 4 starting to move in a very sloppy way, especially if this MACD moves above this 0 line. So we're already in an area of what looks like a reversal, because we have divergence in a very big time frame. We have the first low caused by the war in Ukraine. We have this second low, which totally went above the RSI, and that was during the weekend when the negotiations didn't really work out, and things didn't really stop. And we have our good lower lows on the chart and the good higher lows there. So for the Euro USD, yeah, we're going to keep on watching this. I'm not going to delete anything from this. Yeah, we just keep on rebounding the same analysis that we kept doing. This is the GBP USD 15-minute chart. Yeah, at these lines, I think we're drawing them sometime. Yeah, so we're at this Fibonacci moving down there to this. Okay, this is a daily chart. I'm putting in the 4-hour chart. Yeah, so we had marked out this area here to be a place of precaution, and yeah, it looks like price really moved below there, and it has been supported perfectly the way it was supported there. Yeah, this one was caused by the war, so we marked it as our area to have some precaution when we are selling, and yeah, it has really worked out. So there, that is a low point, and yeah, we're going to move lower than that. So we shall just keep on watching these charts. This analysis doesn't move from here. Every time we come on this program, we shall just move to the same charts that we've been looking at all this other time. Yeah, so I think that's it for today. Thank you for watching. Have a good day. Goodbye.